Good weekend, all. Ira Epstein with your metal market wrap-up. And this wrap-up's your weekly edition for this Friday evening. And we're right now on the 3rd of February, 2023. And my gosh, what a week. You know, the most amazing thing is, in the silver market, I have been warning traders to stay away from the sideways action of the Bollinger Bands. I said you get false breakouts both to the top and downside, and it's what's called a widow killer. It'll ruin your account. Guess what? When we take a look at it, especially the daily chart, where yesterday you got up way over the upper Bollinger Band near $25, and today into the 22, mid-22s. Come on. And do I think there'll be follow-through? No. I think you're just caught whipping back and forth here, and people get caught up. So what went on? Well, as you know, the big number this morning, and this has been a trifecta week. You had the FOMC meeting, you had the European Central Bank, you had the Bank of England, we had ADP numbers, Challenger Gray numbers, the JOLTS data, and today culminating with the jobs report. What I tell traders is you got to have this mentality. This is not where you make money. This is where you lose money. This is where there's that train coming down the road at 200 miles an hour, and you think you're good enough to jump this way and jump that way and do something. You generally don't. Don't get me wrong. Some of you can. And some of you probably did. The vast majority, I believe, didn't. Why? I own a brokerage firm, right? And now I'm running a big division of a firm too, all right? So running a division, I get to see everybody's buy and sell orders. And my clients, if those that work with me, they know you just stand away. We pick up the pieces afterwards, and starting this week, we get aggressive in the markets, all right? Let the other guy try to second guess all these reports. Not only the report, the reaction to the report. So everybody today comes in. The guess was 187,000 jobs for the jobs report. The low number I saw was 125, and the guess up to 300,000. I'm watching CNBC today, and they're all giving their guesses. Nobody's over 300,000. And nobody believed. I was watching Steve Leisman. At first, I was watching Rick Santelli. And Rick is looking at the number, and he goes, oh, I know Rick real well. And he's 517,000 jobs. He couldn't control himself. I mean, it's what? This is beyond mind-boggling. But they didn't get into the revisions for December. They're up. Then we saw unemployment fall to 3.4%. That's the lowest since 1969. Now, let me think. We had a Fed meeting, and the Fed saying that they think unemployment's going to go up. We just hit a low, a 50-year low. These guys are not on their game. And I said that to you every day, Wednesday night, Thursday. I think he blew it. Now, our Fed chair, he being the Fed chair, gets a chance Tuesday at 11:30 Chicago time on Bloomberg on the David Rubenstein. If David will ask him some key questions, this is where he can clean things up. And you know this week that the Fed members are going to hit the road, and they're going to be hawkish. How could they not be hawkish? Are they going to come out and say, no, I think this is all just fine? Then the inflation genie's not going in the bottle. 500,000 new jobs. Those people put money in their pocket. They go out and they spend. That spending creates inflation to a degree. What they spend on is going to be the key. But when people have money and you keep adding jobs, I've yet to see an economy where the inflation keeps falling. I could be very wrong. I'm not a teacher of economy, but I think I'm right. So they've got to figure out a way to do this. The people that are thinking that the Fed is one and done in February, you are so wrong. You're not even close to right. This Fed is now got to stay longer. They just added months to staying longer at whatever number they go up to and they decide to pause. They need this jobs data not to surprise the market by adding 400,000 more jobs than was thought, but losing 200,000 or 300,000 more that they were getting. You don't have to agree with me. You watch. That's what's going to be the end game. So why did the gold market get hit so hard? Because the friend of gold, silver, and copper have been a weak dollar recently. What's missing in the equation for the copper market especially has been lack of Chinese buying. But the gold got hit because if the dollar went up on the surprise today, then the gold's going to get a setback. And that's what's happening. So gold slipped this week 3.5%. That's a big slip. That's not a small slip. When you, by the way, that slip is, I said for the week. Let's come back there for one bit here. That's the monthly chart. For the month, we are down 3.5%. Oh, I forgot. Today's only the third day of the month. We got a long way to go. This is the chart that I was focused on, the weekly down 3.5%. And the reason they're both the same, you only got 3 days this month, and this is the week. So they're going to be the same right now. They'll start changing soon. But you can see that's a pretty sizable drop. Did I not tell every one of you that I thought this market was going to have resistance from the 1940s to 1985? If I didn't, go back and look at the videos. They're all there on YouTube. I know what I said. So that was my zone. The word is a zone. I'm not telling you to go short up there. I'm a bull in gold. I'm not bearish gold. But that's where I thought the market would have its first problem. And when you take a look at this week, wow, that's quite a week. 1959.10 down to a low of 1861, $100 break. You don't get a lot of those, but you have one right now. You still have a pattern of higher lows, higher highs, and you're still over all the key averages. This is what the trade's going to look at. And if you make it in there, that's where I expect the buyers to show up. The 18-week average is going to jump this week. So when we open Sunday night, it's going to come up. I don't know if it can jump $20. Let's take a look and see if we get an idea. 1783, 1770, 280, and 1757. Let's just round it, $12, $13 a week. It'll put it in the 1790s. That's my guess. So it's not quite ready to do a crossover, but that should still be the zone of the support. As we look at the Bollinger Bands, you rode them, and finally you got that outside day down. Now, if this week you take out the highs of this, or next week, 2 weeks in a row, then wherever the Bollinger Band is becomes your next resistance. But it's going to be an important resistance. I don't think that's what's going to happen. I think you can either have, I expect to have a lower low week since you closed on the lows of the week, margin calls and the like, and then I expect the market to try to stabilize. When we look at momentum, you have not lost the bullish embedded reading. It's going to come under attack the first part of the week is my guess. But if the market recovers in the latter part, it might still embed. You got to play that differently. Be very careful. Keep your eye on the chart. The reason it'll lose something is the way the math will work with it, because you close literally on the lows of the week. It'll weight on it heavier than it normally does. In terms of the gold-silver ratio, we have been watching, you and I have been watching here, this market climbing up to it. Now, last week it finally, January 27th, got here, and I said, we'll have to see what it does. It's not uncommon to overshoot it, which is exactly what happened. Do I think it's going up here? I don't. But not surprised. It's not time to say, hey, silver's going to gain on gold. If you look at the silver market, you still have the pattern of lower highs, lower lows, but I'm looking for support. I think the silver between 2207 and 2136 will find its support. You lost the embedded reading. I think it's a lockup. Doesn't mean I'm right, but I think it's a lockup. You're going to hit the 18-week average, if not go for the 200-week average. In the copper market, you're going to lose the embedded reading, I'm pretty sure, the way that I call it, being under 79 right off the bat when you reopen on Monday. I'd love to see this market get into a 4 range. I think this number will jump. You're right now running 379.60. The week before, 376. So it's about 3 cents. See that? Each week. So we're probably going to get close. Ballpark, just eyeballing it. 382, 383 area. Okay. I already have a game plan. I watch it. There's no trend here to trade off of. Lower and low, higher high. We're missing China doing the buying. I've said that to you all week long. Nothing has changed. When we look at the platinum, it reverted back to bearish. Lower highs, lower lows. The pros, I think, will aggressively sell into this with stops over last week's high. Still looking to see if they can get to 962. Beyond 962, I'm not convinced I'd want to press the market. We'll see. But that's the number I think they're looking for. And in the dollar, I was hoping you'd get down here. You didn't. You can get a little bit more of a bounce, but I think the pros are going to sell it. You still have a locked-in embedded reading. So I am expecting on a weekly chart to see the pros selling this market. If you get a close by the end of the week where the red line's over 21, I think they get out. But I'm betting that they sell the market early on. Now, I will be all over these markets in futures and ETFs because there's so much to do in GLD, GDX, SLV, SIL, all of these markets. So let me work with you on it. At 5:30 in the morning, I start, sometimes 5:15 a.m. Central Time. I start recording and I get a video out. I love to have it out before 6 o'clock in the morning. You know, think about it. Out west, that's 4 in the morning. Asia, I've got subscribers and people that join me all the time from all over the world. And then at 9 o'clock, I always wait a half hour on the stock market. I let the algorithm money get in. Plus, what time do most of the government reports come out? Typically between 7:30 a.m. and 9 a.m. Chicago time. By then, I can tell you what they're doing. We talk the fundamentals, what the report looked like. Then I'm giving you the trade ideas, and I'm recording right away after 9, getting that out to you. So we cover 40 futures, 40 different ETFs and stock markets for you. It's fun. I walk you through the trade setups. We're looking at the markets as they're ticking. What are they doing? How do they go about it? What do you got to lose? Take a look at it. Go to our website under the word education. No, under the word research for that. Education is where the courses are. And you can always call my staff. They'll help you. And you can click up here at any point. It'll take you right into that area. Join me. I'm Ira Epstein. I do intend on doing possibly this weekend a number of special reports. It's cold enough where I want to be here and knock off some things. So I think I'm going to be working tomorrow a good part of the day. You have a great one. I'm Ira Epstein. I will see you come Monday morning. Take care.